Hello dear friends, welcome to my channel Engineering All-in-One. In this video we will see MCQs on the national income. So let us start with question number 1. Question number 1 is here, net investment is equal to. Option is here are gross investment plus depreciation. B option is here gross investment minus depreciation. C is multiple depreciation and D is gross investment divide depreciation. So these are the four options given and we have to here identify the correct option. Net investment is equal to gross investment minus depreciation. So option number second is correct option for this question. Now see question number second here. Capital goods are those goods. Option A is here which are used in the production process for several years. Second is which are used in the production process for few years. And C is which involves depreciation losses, and D is both A and C. Capital goods are those goods which involve in the production process for several years. Also they suffer depreciation loss. So both A and C are correct. Option number D is a right option to this question. Now see question number 3 here. Net capital formation causes. Option A is here increase in the production capacity. Second is increase in the depreciation. Third is increase in the profits. And fourth is increase in the cost. Net capital formation causes increase in the production capacity. Option number A is correct option for this question. Now see fourth question here. In the production of sugarcane is final good, capital good, intermediate good, and none of these. In the production of sugarcane is intermediate good. So option number C is correct option for this question. Now see here, what are intermediate goods and services? You can pause the video and read these lines one by one. Also you will come to know about the double counting and what are its effects if double counting is done while calculating GDP. So pause the video, read these lines and then resume it. Now see fifth question here. Those goods which satisfy human wants directly are called intermediate goods, consumer goods, capital goods, and none of these. Those goods which satisfy human wants directly are called consumer goods. So option number second is correct option for this question. Now see sixth question here. Increase in the stock of capital is known as capital loss, capital gain, capital formation, and none of these. Increase in the stock of capital is known as capital formation. So option number C is correct option. Now see one more question here. Income of the family is example of which variable? Stock, flow, both stock and flow, neither stock nor flow. Income of the family is an example of flow variable. Now see here, what is flow variable? A flow variable is a quantified variable that is measured over a specified period of time. That is why the income of a family is considered as the flow variable. Search on Google for more examples and you will get clear about the concept. Also read these lines one by one. Now see ninth question here. Which of the following leads to depreciation? Normal wear and tear, damage due to flood, damage due to market crash, and none of these. The right option to this question is option number first. Normal wear and tear leads to depreciation. 10th MCQ is here. Which of the following is semi-durable good? Radio, clothes, milk, and petrol. The right option to this question is option number second, clothes. Now see here. Here in this part, non-durable and the durable goods are given. The definitions of these two are given in these lines. Also examples are given. So read these lines one by one and you will come to know about these durable and non-durable goods. Now see 11th question here. Which one refers to the net indirect taxes? Indirect tax plus subsidy, indirect tax minus subsidy, direct tax minus subsidy, and none of above. We have to here identify the correct option for net indirect taxes. NIT, net indirect tax. Net indirect tax is equal to indirect tax minus subsidy. Option number second is correct option for this question. Indirect tax minus subsidy. is the correct option for this question, net indirect taxes. See 12th question here. Basis of the difference between the concepts of the market price and the factor cost is. So we have to here identify the difference between the concepts of MP and FC. Direct taxes, indirect taxes, subsidies, and net indirect tax. The right option to this question is option number D, net indirect tax. When we add factor cost, net indirect taxes, then we reach to market price. So the basis of difference between the two, market price and the factor cost, is that of net indirect taxes. Now see 13th MCQ here. Which one of the following is not correct? NNP at the market price is equal to GNP at the market price plus depreciation. We have to here identify which one of the following is not correct. So after reading the option 1, we will do some little analyze on it. NNP, we knew that NNP at the market price is equal to GNP at the market price minus depreciation. So clearly question number 1 is wrong, because here is a plus sign, it should have been minus sign. NNP at the market price is equal to GNP at the market price minus depreciation. So first option is wrong. Leave these three, B, C and D, these are all correct options. GDP at the factor cost is equal to NDP at the factor cost plus depreciation, or you can also say that GDP at the factor cost minus depreciation is equal to NDP at factor cost. Similarly, these two are also correct. You can see yourself. Now see 14th question here. Which one leads to the factor cost? Market price minus indirect taxes, market price minus net indirect taxes. Market price plus net plus indirect taxes, and market price plus net indirect taxes. First of all, leave these two, indirect taxes. We will see only in the previous MCQ. I have told you about the indirect taxes, net indirect taxes. So from these two options, the right option. See here, market price is equal to factor cost plus net indirect taxes. So factor cost, if we will transfer this to here, market price minus net indirect taxes is equal to factor cost. So option number 2 is correct option. That means D option is also wrong. Market price minus net indirect taxes is equal to factor cost. Now see 15th question here. Domestic product is equal to national product plus net factor income from abroad minus net factor income from abroad, divide net factor income from abroad and multiple net factor income from abroad. Domestic product is equal to, the right option to this question is option number 2, national product minus net income factor from abroad. So these were the 15 MCQs on the national income. I have tried my best. If you feel any kind of mistake, you wish to add any extra point, you are welcome in my comment box. Also, I request you, if you have got some amount of information from my video, you are requested to subscribe the channel. That is the best way to say thanks to me. Thanks, stay blessed.